Hello, everybody. Happy Wednesday to you. Happy Wednesday. Yesterday we did some back testing, and that back testing was extraordinary. In fact, we've got something pretty special going on now, around now, today. We've got a robot sale going on. So for those of you that want to get in on that action, we would love to invite you to get in on that action. We love you. And so I put the robots on sale because every time I do this testing, everybody gets really excited about the robots. I get excited about the robots. But before you get super excited about the robots, one thing that I do want to warn you about is that trading involves a substantial risk of loss. It's not necessarily suitable for all people. This is a high-risk endeavor here, and we love you, and we want you to be safe. We want you to be careful. And along those lines, and on that topic of being careful, I want to talk to you again about a subject that's near and dear to my heart, which is, hey, what do I do if my robot gets in trouble? What do I do if my robot has losses? What do I do if things go wrong with my robot? I want to talk about that particular subject today, continuing with our testing of one of my favorite robots, which is what I call the reversal arrows with ADX. It's inside your robots course if you're already a robots member. If you're not, jump on over, grab that link, take advantage of that sale. It's not cyber anything. It's not black anything. It's just a sale because we love the crap out of you. All right, let's jump on over. It'll take me a moment to get this all set up, but let's jump on over to MetaTrader. While that's up and running, I got to let you know, I loaded Windows onto my Mac today, and I'm going to be able to start doing testing straight from my Mac. I'm really excited about that. I don't know if that will actually work, but we'll see. All right, I'm here inside of MetaTrader, thanks to Frederick for reminding me about how to get a variable spread working on my tick data. Now, I've used Tick Data Suite, so I'm going to get 99% modeling quality on my testing, which is great. That means that my testing is going to be somewhat reliable, somewhat believable, but it's not going to be profitable. So let's show you what I'm talking about. This is one of my favorite trading systems, the reversal arrows with ADX. Today I want to trade the Euro-Swiss franc because it tends to range, it tends to go backwards and forwards. It can trend, but usually if it begins to trend, it will correct. So I want to test that robot. I'm going to pull up my expert properties. The magic number distinguishes our robot trades from our trades that we take in a discretionary manner. Slippage and max spread keep us out of the market if the slippage or spread increases. We're going to just use one mini lot on the first trade and 3 mini lots on the second trade. And we're going to take 2 trades. We're going to take one trade if we get a reversal arrow and a second trade if we get another one. I'll show you that in a minute on my charts. And we're going to just try to get 10 pips or $10 no matter what. So I'll exit out of the settings, jump over here to Google Chrome. On my screen that you see in front of us right now, you will see red reversal tabs. These are what I call reversal arrows or reversal tabs. They're built with the MACD and the stochastic oscillator. I've talked about that in a previous video. It's an indicator that I built that I would love to give away to you for free if you go to robbooker.com, but that's a subject for another time. Now, we want to take sell trades if these reversal arrows pop up, and if the ADX is showing a lack of a trend during that same time. The ADX isn't a perfect way to distinguish a trend, but it works for me, and it works for this system in general. Now, if we take one trade right here, and that trade is not profitable, or the price doesn't fall, we can take a second trade later on, as long as price has risen higher, and it has gone into another reversal arrow situation, and the ADX is still showing there's a lack of a trend. So what this system does, in other words, is it counter-trend trades. But it counter-trend trades when the market's trending behavior has slowed down. That's not a perfect system, which I'll show you in a moment. We're going to present a problem, and then we're going to present a solution. I'm going to just test 2017 January to the present, to recent days. So I'll click Start, and we're going to use tick data, so we're going to get hopefully a 99% modeling quality when we run this test. And now the test is going. I like to sneak a peek at the graph as this test is going. So it looks like this trading system is working great, and then it goes into a little bit of a drawdown, but then corrects itself, and we get a profitable trade. And let's see where we go from here, right? We should still be testing. When I test on my VPS, my virtual private server, there's always a little bit of a lag. Okay, looks like we had a bunch of profitable trades, and then at the very end, we took a trade that never came back. Let's look at our results. It looks like in June and July of 2017, we took some trades. And it looks like those trades were opened at 1.0851, 1.0948, and they never came back. We'll jump over here to the charts, and I'll show you these trades. I had this chart up for a reason. TradingView went down earlier, but I was able to pop up on my screen everything I needed before we started this webinar. So trade 1 was taken back in June on a 5-minute chart when there was a reversal tab showing pointing down and when the ADX was showing a lack of a trend on a 5-minute chart. And then it took another trade later on when another reversal tab was shown and the ADX was saying that we weren't trending. And then neither of those trades were winners. Price went up. And then price has never come back down to these levels. Price has never recovered from this. And so those trades became losses, and those trades destroy our results. In fact, if you look at the report, we have 99% modeling quality, which means our backtesting is somewhat reliable, meaning what you see in backtesting is probably what really would have happened. And although past performance is not necessarily an indication of future results, it's the best we can go on. And this is telling us that we could get into some serious trouble in this trading system and our trades could go wrong. So we didn't make any profit. All of the profit was given back, and we would be stuck, if this system were running live, we would be stuck in a pretty substantial drawdown right now. And we would be fairly reasonably, massively frustrated by this because of that drawdown. So what do we do about this? How do we deal with this problem? And are there any opportunities lurking inside of this problem? Well, I think there are. So if you jump over here to the charts on the 60-minute chart. So let's say that back in June and July, we got into some bad trades on the euro Swiss franc. Let's say that we got into those trades and price just continued to move upward. What could we do about that? Could we do anything? Well, I have a suggestion for those of you out there in robot trading land, that if you were trading this robot, and it could be on any currency pair, you can backtest some other currency pair, and that currency pair could do great in your backtesting, but you could get stuck in a trade anyway, because past performance doesn't necessarily indicate future results. So you could backtest and say, oh man, the Australian dollar, Canadian dollar worked perfectly with my backtesting. And then you could start running it tomorrow, and it could open up the worst trade it's ever had. So what are we going to do about that? Well, first of all, you could trade with a stop loss. And I think that over the next couple days, maybe on Friday, we could do a special edition and we could backtest some robots with a stop loss. Okay, that's fine. You got to pick the right robot for the job, and you got to do a bunch of testing, and you got to make sure you're good. Okay, that robot could still go through a string of losing trades. It could go through a string of multiple, like 15 in a row losing trades. No matter what your backtesting showed, it could go through a string of losing trades. So you're going to have a tough time no matter what, eventually, with every trading system. Every system is eventually going to break down. So what are we going to do about it? Well, with this system that doesn't use a stop loss, that tends to work well over time when traded in a portfolio of currency pairs, we've got a problem. So what I would do is I would add something to my 60-minute charts. And what I've added here is what I call the Palladino RSI. The indicator was created by me, but programmed by Andrew Palladino, who is the greatest programmer of all time and forever. Andrew Palladino and I teamed up to get this indicator on TradingView. What this indicator shows right here after the trades were opened is that early into this trade, within a week of this trade opening, 5 time frames on the Euro Swiss were overbought simultaneously. 5 time frames were overbought simultaneously: the 1 minute, the 5 minute, the 15, the 60 minute, and the 240 minute charts were all overbought. If when that line appeared, I drew a trend line on my charts, and I traded a break of that trend line lower, if I took a third, what I call a third trade, if I were able to take that third trade, I could get from 1.1030 down to, I could do a 50 pip trade there. And that third trade could be twice as big as my second trade. So 50 pips could be a substantial reward or gain, and I could close this out. I could just close everything and stop out. Now I have other options as well. I could, at this time, I could close trade 2 when this shows up. I could close trade 2, and this over here could represent a brand new trade 2. I could start to shove off or get rid of old trades. But what I want to encourage you to do is think about 2 weeks into a bad trade with the Finch, or reversal arrows with ADX, a Dr. Bill Finch that we have brand new inside the robots class. I would encourage you, if you're 2 weeks into, 1 or 2 weeks into a bad trade, and you see something like this reversal situation, this Palladino SRI, 5 time frames overbought at the same time, get another trade on there and deal with this early. Deal with the trading problems that you have early. Get this thing sorted out. Don't get stuck in something that's going to last for a while. What I've noticed is, in general, when trading the Finch or the reversal arrows with ADX, within 2 weeks of taking a trade that has gone wrong, you're going to have a moment of opportunity that's going to give you a chance to reduce the loss, get out, and move on. And then even if price climbs up from there, which it eventually does, you're going to have several opportunities. Let's say that you got in again, let's say the robot kept running, and you got in a series of trades again, which became a loss. You're going to get another opportunity for a reversal within 1 or 2 weeks' time. You draw a trend line underneath price and take another trade. You're going to get a chance somewhere inside of 1 or 2 weeks to deal with that problem. You're going to get a chance to do that. Now, the only way that I think you can handle trading systems like this, and we can jump off the charts now. We don't need to look at the screen or anything like that on the desktop anymore. The only way that I think you can deal with a trading system that doesn't use a stop, like the Finch or like the reversal arrows with ADX or whatever. There's a couple of things that I think you need to think about doing when you trade a strategy like this. One, you need to learn how to identify longer-term reversals. Number 2, you need to trade the system in a portfolio. You can't just run one currency pair as effectively. I don't think that that works as effectively. You need to balance these trades that are going to be in drawdown out with trades and currency pairs that are going to be running profitably during that time. You've got to think about it as a portfolio. Those two things are critical. Deal with your losing trades early within 1 or 2 weeks by learning how to identify reversals on longer-term charts. And then second of all, trade this thing inside of a portfolio where you're running multiple pairs. As a third idea, you can't run multiple currency pairs, lots of currency pairs, 18 currency pairs in a really tiny trading account. You can't do it. It's not going to work. It's not going to be effective. That's not what you want to do. If, on the other hand, you have, and this is going to be the case for some of you, a small trading account and you want to run a robot, there are some other alternatives for you that I think you might be interested in. Number 1, if you have a small account, you want to grow that account aggressively, and you can only trade 1 or 2 currency pairs in that trading account, and you want to be aggressive. Remember, trading involves a substantial risk of loss, and I'm not encouraging any of you to blow up your trading account. But you could trade a robot with a stop loss, like the T6 trend trading robot that has a stop loss from inside the robots class. And you can identify longer-term chart reversal patterns, like we just talked about. Then you turn on the T6 robot with a reversal pattern, with a stop loss, and you can use a larger trade size. And if you stop out, you'll stop out quickly. And if you get a win, it's going to be a bigger win for your account. That is a completely reasonable thing to do. That could be a possibility for you. You could do that. There's a third way to do this, and I was talking to Boris just yesterday. Thanks, Boris, for reminding me about this. It's a great idea, Boris, and I love what you and your members in your chat room came up with. This is something that an old friend of mine, Kurt, used to do. Now, Kurt used to trade one or two currency pairs, the pound yen or the euro yen or a yen-based currency pair. And he used to trade reversals, just like we talked about doing. And he used to only trade one or two currency pairs at a time. And he used to do it, though, in a small trading account that he was perfectly willing to lose if things went wrong. So he jacked up the trade size, and he accepted the fact that there would be a drawdown occasionally, and he would get really aggressive on a third trade and really maximize. He would just go full margin eventually. So he would be using 70% of his margin at some point in a smaller trading account. And that trading account with a counter-trend robot like this, he was doing essentially what we're talking about right here, trading to pivots and to moving averages. And he would just get really aggressive, and he would grow a small trading account into something bigger, take the money out, start over, grow it into something bigger, take the money out, start over. And he would just repeat that process over and over again. But he knew that eventually, one of those small he used to start accounts with $2,800, which is a strange number, but he margin called once, and he was only left with $2,800, so he just went bananas and got really aggressive, starting with accounts that had $2,800 after that. You could do that, and you would know that eventually you're going to blow one of those accounts. Like that account is going to blow up eventually, and you could segment money that you can afford to lose out into those smaller accounts and get aggressive with a robot. That's not a bad idea. That's not a terrible idea if you can afford to lose that money, because you may start on day one with one of those smaller accounts and blow the whole thing. And there it goes. And then you don't have that account anymore. So it would have to be money that you can afford to lose. And I would be willing to try something like that out. But I would probably do it with a robot with a stop like we've talked about. I would probably do it with a small account and run the T6 robot when I see a longer-term reversal pattern and turn that on and just get really aggressive with the trade size and see if I could just push that account forward. And as soon as that account doubled, take all that money out and then start again. And as soon as that account doubled, take all that money out. And as soon as that account doubled, take all that money out. And eventually that account's going to blow. And then I would start one over again. And that I don't know if that's a strategy for success long term, but that's not bad. That's not a bad way to think about it. Remember, trading is risky. I'm not encouraging you to do anything that you can't afford to do, and I'm not promising that these robots are going to be the answer to all your dreams. These are enjoyable to trade. They give me tons of free time. You can backtest them, and you can verify whether they work or not, or you can see where they get stuck. And then you can decide what you will do together with our family of traders when those robots get stuck. And I love you. So don't forget about the sale. Now we have, we have some people here today commenting today?
We got a couple.
All right, we got some new books in the office, and we got some new red envelopes in the office. So we've got a copy of Think or Grow Rich, and we've got a red envelope. And we want to send you a copy of Think or Grow Rich. So if you are a brand new Robots member, if you took advantage of the sale and you got the robots, or if you already have the robots because you're a lifetime member or Robots customer, leave us a comment in the video below today or tomorrow. Let us know your name. We'll announce the winner. We'll pick a winner in the comments. We'll tell you that you're the winner, and then you can message us with your address, and we'll put the book in the envelope, and we'll send it out to you. Toot sweet. I love you all. Thanks for being here, everybody. Have the greatest day ever. We will be back with a live show on Friday. We'll be on the road tomorrow, and we may do a live show from the road in the car. We're on our way to Austin, Texas tomorrow. Love you all. Have the best day ever. Don't forget about the sale. We'll see you next time. Bye for now.